These three stocks are the ones that you will not regret buying soon on for long-term growth. The collective scenario suggests a less resilient U.S. economy. Here are the stocks to buy to ride on this tailwind. Sarepta Therapeutics, creating the first FDA-approved treatment for a genetic disorder and a strategic partnership that capitalizes on the treatment's potential, poises Sarepta for significant growth. NextGel, supplying hydrogel pads for AbbVie's RESONIC rapid acoustic pulse device. Rocket Lab, new AHSD launch from Virginia for the Department of Defense Innovation Unit. Let's dive in. Here are the three stocks you'll regret not buying soon. November 2023. Welcome to Timely Investment Research. The recent surge in official interest rates, the most substantial in 40 years, is anticipated to impact aggregate demand significantly. This could potentially result in a GDP reduction of approximately 4% for the current year, followed by an additional 1% decrease in 2024. Despite these headwinds, it has led to this list of stocks to buy. Looking forward to 2024, the economic landscape is expected to face headwinds as the spending of excess savings diminishes, fiscal policies tighten, and the delayed effects of monetary tightening take hold. This collective scenario suggests a less resilient U.S. economy. Given these considerations, investing in companies poised to weather these economic challenges strategically becomes imperative. Here are three up-and-coming stocks for ensuring profitability in this uncertain economic climate. So here are the best stocks to buy to exploit these uncertain economic conditions. Number 1. Sarepta Therapeutics. Sarepta Therapeutics is a biotech company specializing in medical research and drug development. Yahoo Finance has 18 analysts predicting a one-year price range on Sarepta Therapeutics to be between $139 and $220, with a mean of $180.61. Sarepta Therapeutics boasts strong financials. In third quarter 2023, $331 million in revenue grew at a 44.1% one-year compound annual growth rate and a 37 cents earnings per share, up 146% year-over-year, demonstrates signs of being undervalued. Revenue further outpaced operational expenditure growth of 15.5% year-over-year. Sarepta shows superior growth potential compared to its competitors from its government approval for a Phase 3 trial drug and a new partnership. In June, Sarepta received U.S. FDA approval for pediatric patients ages 4 to 5 with ELEVIDYS. ELEVIDYS is a gene therapy for Duchenne muscular dystrophy, a genetic disorder in which the proteins that protect muscle fibers are altered and cause the muscles to atrophy, occurring in newborns. This approval is groundbreaking as it marks the first ever approval of gene therapy for Duchenne muscular dystrophy, making them first to market. Sarepta has also forged a strategic partnership with Quest Diagnostics to identify patients eligible for ELEVIDYS, creating a pipeline of patients for the company's new gene therapy. Sarepta Therapeutics is in an attractive position for investors because of its strong financials and how it's the first company with an FDA-approved treatment for Duchenne muscular dystrophy. Number 2. NextGel. NextGel is a leading provider of high-water content hydrogels for healthcare and consumer applications. NextGel has formulated over 200 combinations to bring natural ingredients to gentle skin patches worn with minimal irritation. NextGel stock is up 45.04% year-to-date. The healthcare market is projected to grow from $10.06 billion in 2022 to $69.63 billion by 2029 at 31.8% compound annual growth rate. NextGel boasts strong financials. Quarterly revenue increased 108.02% year-over-year to $1.17 million, and earnings per share grew 28.53% year-over-year to -14 cents. Cash from investing has risen by 176.31% to $4.12 million, and net change in cash grew to $2.90 million, showing adequate financial stability. NextGel has secured a pivotal deal with AbbVie to supply hydrogel pads for RESONIC, its FDA-cleared non-surgical cellulite reduction tool. AbbVie, a biopharma giant with a market cap of $250 billion, presents a game-changing opportunity for NextGel. Speculation is rife that this collaboration could drive significant revenue growth, potentially leading to profitability by third quarter 2024. The essential role of Nextdoor's pads in powering the RESONIC device ensures a steady demand, particularly as AbbVie aims to deploy around 10,000 devices in the initial 3 to 4 years. Initial orders for Nextdoor's hydrogel pads could materialize as early as first quarter 2024, marking a promising start to this strategic partnership. Nextdoor stock is valued at $1.90 and is primed for an explosion in growth as it is already ahead of the competition through partnerships and robust financials. This makes it one of those stocks to buy. Number 3. Rocket Lab. Rocket Lab is a space company with an established track record of delivering satellite manufacture and on-orbit management solutions. Rocket Lab stock is up 11.63% year-to-date, putting it in an attractive position for investors. The global rocket propulsion market is anticipated to grow to $10.87 billion at a 7.8% compound annual growth rate from 2022 to 2032. Rocket Lab boasts strong financials. Revenue grew 239.02% YoY to $211.00 million, and earnings per share grew 78.88% year-over-year to -12 cents. Total assets grew by 0.84% to $989.12 million, and net profit margin has gone up to $64.43. This week, Rocket Lab revealed that it has officially entered into a launch services agreement with the U.S. Department of Defense's Defense Innovation Unit. The collaboration aims to conduct a Hay-State Hypersonic Accelerator Suborbital Test Electron mission scheduled to take place at Rocket Lab Launch Complex 2 in Virginia. This helps make it one of those stocks to buy. This mission's focal point is deploying a suborbital payload designed by the Australian company Hypersonix, known as DART-AE. DART-AE is a scramjet-powered hypersonic vehicle recognized for its capability to navigate non-ballistic flight patterns at incredible speeds, reaching up to Mach 7, approximately 8,350 kilometers or 5,320 miles per hour. Yahoo Finance analysts have labeled Rocket Lab as a buy. This new contract primes Rocket Lab for an explosion with the stock currently undervalued and poised for growth potential. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.